Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick. And guys, the markets today were somewhat muted. We did have an update in the markets. PCE data came in line, but they were somewhat muted. We did have some movers on earnings. We're going to cover a few of those today. Plus, we're going to cover some mega caps as well. But guys, keep your minds focused. Next week, we got the FOMC meeting, which we're going to have information regarding any future rate cuts. That comes on Wednesday. So keep that in your mind. And also jot it down on your calendar. All right, guys, let's check out the market summary board and see where everything panned out today. We got the Dow Jones up 0.54%, Nasdaq up 0.91%, S&P 500 up 0.43%, U.S. oil down 2% today. Nice decline there. Gold pushing up again above $4,922, reaching all brand new all-time highs. And it's also targeting that $5,000 level. We'll look at that chart, as well as Bitcoin, basically flat up 0.17%, but has saved itself in the near term. And I'll get into more details about that here in just a few moments. First up, though, we got the S&P 500 heat map. And we see here today, NVIDIA up 0.83%, Microsoft decent day after the decline, 1.58% in the green. Meta also pushing up nicely, 5.66%. Tesla up 4.15%. We'll look at both Meta and Tesla stocks in their charts here in just a few moments. PG had a nice day. Procter & Gamble up 2.65%. Amazon also up 1.31%, while Walmart slid about 1.28%. All right, guys, so where does that take us in the S&P 500? Look at this, guys. As I said, somewhat of a muted day compared to the last 2 days. We had price move up, and really look at this in the 10-minute chart. This explains it a lot better. We opened the day here right at the top of the parallel, had some immediate selling coming out of the market. Then we rallied back from about 10 o'clock all the way till the mid-afternoon, tagging and piercing the top of this parallel several times before getting rejected. Guys, again, back to the TA. These are magical trend lines on the chart. This parallel channel extends all the way back here to 2020, and yet it's still influencing price action as of today. So remarkable stuff. We'll see what happens over the next couple of days. Do we gap over this? Do we start chopping sideways or get rejected from this most recent rally up? All these other previous rallies, these V-shaped recoveries, have pushed higher just a little bit. Now, if we don't do that on this attempt of a recovery, that will be very telling for at least the near-term price action in the S&P 500. So we've got to be watching these all-time highs and really watching in the near term. What's going to happen over the next couple of days? Are we going to breach this, or are we going to stay in line and start moving sideways, potentially building momentum to push higher and make a new all-time high? Interesting stuff on the spiders. Next up, on the Qs, you can see here the Qs. Great day for it again, but we've noticed we've broken this inclining parallel channel. Now the Qs need to fight to get back in towards this upward momentum. Resistance still at play right here at $624.97. But if you notice, we've hit it once, twice, 3 times, 4 times. So this level is definitely weaker if we get a big push in tech in the near term. We should be able to push through this pretty easily, which then that would also accomplish getting back into the parallel channel. All in all, though, be watching this level very closely, because that could flip the switch into more bullish momentum and or getting rejected, implying more downward pressure in the markets. Next up, SMH had a great push up today after hours with some earnings pulling back slightly. But you notice, too, kind of like the S&P 500, we moved up and then we sold off. But this on the SMH, guys, notice we did not get back up to the high and opening area on this chart like we did in the S&P 500. We hung out down here. Matter of fact, we started going a little bit lower, testing the low pivot, and even after hours getting beneath that. So what is this in the near term? This is a bear flag. This is implying near-term downside pressure in the SMH. If we flip over to the daily time frame, which keep in mind, the larger time frame dominates, folks. All right, so 10-minute patterns can fail pretty easily. Heck, daily patterns can also fail, but they're harder to fail on the larger time frame. So we've got a 10-minute bear flag on the SMH that should imply downward pressure, likely as early as tomorrow, We'll see if that lasts, being a Friday, and we could have some Friday afternoon float action moving the markets higher. So if we do start declining on the SMH, main area I'm watching is this 50% area, the parallel. We've already tested it several times and have since bounced up every time in the most recent past. So that area is going to be $391.24. Next up, the IWM. Also, great push on the IWM today, pushing up, tagging this inclining trend line. And guys, I didn't anticipate us to really hover this closely to this inclining trend line because simply it is a very steep angle on this chart. Shows you how strong the IWM has been starting off 2026. Small caps have really done a great job lifting up, but this could be a pause signal right here. Notice this candle. This is a doji candle. I go in great depth with this candle in one of my courses, Mastering the Overnight Trade, the Sleeper Hold. These sort of patterns develop on charts, likely implying indecision is taking place right here on the charts of the IWM. We don't have to look back further to see what sort of reaction we get with these dojis at the high of the charts. We had a doji here, nice drop right off of that trend line. Go back further, doji, drop. This doji coming from above helped push the price up. Again, showing indecision. The sellers and buyers were equaling themselves out. So you can see just on this one chart, not zooming out that much, these narrow body bars give us a ton of data and a ton of information, especially when they occur at specific parts on charts like at the highs. I'm anticipating IWM tomorrow to be coming down. First major support at 262.48. Actually, that will be a little bit more minor, but this likely won't be tagged tomorrow. But here's the major support, 258.25, corresponding with this pivot high back in December, basically just last month. All right, guys, next up, we've got Bitcoin. Bitcoin, as you see here, and what I was talking about yesterday, we wanted to see price action. If you were wanting to see a decline on Bitcoin, price to close underneath this candle, this Tuesday red candle. Well, it didn't do that yesterday. So near term, Bitcoin chart is trying to save itself. A way it can do so is getting right back above this inclining trend line. This inclining trend line is basically at the highs yesterday. Didn't quite get there today, but kind of a muted day here on Bitcoin. We'll see if it can't get its mojo together to push back above this trend line right at $90,900. If it does that, that could lead to the next resistance at $93,644. Otherwise, this is near-term breakdown scenario, but we don't have a confirmation yet with this breakdown as price is still hanging out right here amongst this red candle. Next up, guys, look at this. Off the charts, no doubt about it. Look at gold just continuing to push up, getting here now at $4,922 on the charts. Guys, this is telling me once we're getting this close to the $5,000 level, I think gold's going to end up making that push and pushing up and tagging the $5,000 level. Now, notice something else too, and this is a little bit of a different parallel, but I did want to show you guys what I've been looking at here on the chart of gold. Now, gold here, to draw these parallels, you simply take a major pivot or a low pivot on the charts. You can see here, I'm stringing this up so that we tag both the trend, both pivots, the pivot right here and this pivot right here. And I'm going to extend it out to this one pivot on the chart here. Can give us at least near-term insight to this bullish momentum that's continuing on gold and a potential stopping point for gold to pause and or start seeing more profit taking come in. So you can see now the top of this parallel is easily above $5,000, right around $5,100. So should gold continue pushing, that's where I'm anticipating the next major resistance to occur on this chart. This parallel is a nice looking parallel, and easily we're now in the top 50%, which does also imply we should still continue in pushing higher, thus meeting that $5,000 level. Next up, silver. Guys, silver, another great push, another brand new all-time high on the chart of silver today. Kind of like with gold, once we're getting close to these major psychological levels, right around $100, I'm now starting to anticipate the gravity just to pull the price up to this $100 level before we start seeing any additional profit taking in silver. Remarkable run on silver. First support, if that does push to 100, will likely be right here, this cup and handle measured move pattern at 89.38, followed by inside this parallel. And here's where I think the ultimate destination of silver will come, is down here on this inclining trend line right around $70 to $67 on the chart. Next up, U.S. oil. Not too much new to report here. We discussed this yesterday, how we've broken out of this declining trend line and have since now started consolidating right under the next level of resistance. This does imply, should this consolidation pattern still stay intact, that we could be breaking through to tag the next level of resistance right here at $62.73. Be watching for a break here at $60.88 for that then to trigger some additional gains in U.S. oil. Look at nat gas, guys. Next up, wow, look at this massive decline that occurred here in nat gas. If I flip over to the 10-minute chart, you can see that all happened yesterday at right about 5 o'clock. We had a massive drop here in nat gas, bringing price all the way back sub $3.50 currently, and we're bear flagging right now on this 10-minute chart. So back to the daily chart. Huge test candle right here. Support is going to be not far away, $3.40. Now, if this level breaks, we're going to be coming down to the bottom of this parallel, $3.08 to retest this. And this too would then be, I think, another buying opportunity for another push up higher on this chart. But guys, this is a clear example why this commodity is called the Widowmaker. Look at that fluctuation in that day. If you were very heavily long up here, you are in some great deal of pain now down here. Very quick and easily that the tides can turn on the natural gas chart. So be mindful. If you know this, just go lighter. You still can make money on these sorts of moves. Just go lighter. Don't put yourself in as much risk. All right, next up, a few stocks or a couple that reported earnings. First up, GE. You can see here, GE had a double beat on earnings as well as in revenue. But with lower guidance, lower than anticipated guidance, this stock did see a decent decline, down 7.38% for the day, breaking this inclining trend line back here from April. So this trend now currently has been broken, has not yet been confirmed. So we'll need to see follow-up move tomorrow to see if this is a confirmed break. Otherwise, price can easily just go right back up inside and on top of this inclining trend line, save itself for the time being and potentially put in another attempt to break. One thing that we do note, look, we've got a topping tail here on the chart. This was giving us insight that GE was likely going to start seeing profit taking. Not only that topping tail, but this larger parallel channel. So for the next support, should GE continue moving down, it's going to be around $289.53. This comes all the way back from a pivot that occurred back here in the year 2000. So I anticipate should price start coming down, we should get a decent little bounce off of this, potentially retesting this inclining trend line. At that point, we can see what pattern develops and then determine which way price is likely to go. Next up, McCormick and Company also reported earnings early this morning. They had a mixed bag, but they also, guys, this theme, have disappointing guidance. So the disappointing guidance helped bring this stock down. Now, you can notice I've got an declining parallel channel where price has just broken this 50% area of this declining channel. Notice also we're getting very close to the low pivots that occurred back here in October of 2023. This area will be the next level of support, just under $60 at $59.32. However, there's another major level of support down here at $56.33. What have we said in the show so many times, folks? When price breaks a significant trend line, it often likes to come down, tag support, and then bounce right back up and retest that 50% area of the parallel. I'm anticipating that, and that could be a very good, quick, short-term swing trade if price continues to flush down here to this 56.33, then could bounce up and retest this parallel 50% area, and then eventually start potentially rolling over a little bit more. So a very quick in and out swing trade can bank you about 10% if that plays out with that support and resistance levels. Next up, we've got Meta. Meta put in a nice day today, up 5.66%, testing the consolidation right here with the high end of the price range today. Next level of resistance, should this momentum continue? This was a great bounce from this pivot low and support at $600.38. We're going to be tagging this $670.51 resistant level, followed by $691.43. Both of those are the next levels of resistance to get up into the top 50% of this parallel. Meta has had a steep decline back over here near $800, now trading over $150 lower on the charts. It's trying to bounce. The good thing is near term, it's putting in higher lows. We had a low back here in November, and then this here in January is, at least for the near term, a higher low. We'll see if this momentum continues. Be watching $670.50 for the next potential stopping point. Next up, we got Tesla. Now, Tesla, I've been talking about this for a while, ever since I saw this inverse head and shoulders pattern, that Tesla has a targeted measured move up here at $512.97. Now, we got very close to accomplishing that feat here in December, just this last month. And we've seen a decent decline here on Tesla, breaking this inclining parallel channel, showing that the momentum for the near term has at least been broken. We even came back, retested that parallel, got rejected. Now we're making another attempt to come back. And what do we know about this show too? The more and more price bangs on these levels, these parallels, these resistance levels, these trend lines, price is likely to go ahead and break through it. Think of it kind of like punching a hole in the door. It just gets weaker and weaker and weaker every attempt of being hit, that eventually the door will just crumble and you could walk right on through. And that's kind of the scenario that could be at play here with Tesla in the next couple of days. Be watching resistance right around $459.68. If we can get back into this parallel, notice this price, $512.97. It's going to be in the bottom 50% of the parallel, which would be easier for Tesla to tag if it can get back inside that parallel channel. Next up, Abbott Laboratories. Now, Abbott Laboratories, as you see here, also, they did have earnings today. They did drop down, as you see here. They had a mixed bag. They had earnings as well as a revenue mix. So they beat on earnings, a revenue mix, and then they also, too, are guiding lower than analysts anticipated. So they have reduced the stock price. Price dropped 10% today. But guys, this is actually a pretty intriguing level. This is now the third tag of a long-term trend line dating back to the COVID lows. This area should be solid support. So far has bounced the stock up from a 106 level up here, now trading post-market around $109. So it's already gotten a $3 bounce. Should this momentum continue and we see a continued bounce, next resistance is going to be up here near $120, around $119.32. Also, another quick short-term opportunity for a swing trade, granted that this trend line does hold. Now, draw this on your own charts if you're about to make this trade, but be mindful of this trend line. If we get a break and a confirmation, we're likely coming down to the next support at $100.71. So keep that in mind if you are trading that stock. Next up, we've got GE. Actually, we already did cover GE, excuse me. This was a duplicate on the chart, but it does and is an important chart to pay attention to. This has had incredible momentum. So a break of this will be very monumental for the charts. All right, lastly up, we've got ANET. Now, ANET also, they had some news come out today that there was new partnerships and collaboration will build out with AI data centers. We've since seen ANET drop beneath this parallel channel most recently, and also form a bear flag on the charts. Why did price stop right here? Well, folks, it's pretty simple. It's just trend line analysis. Pick a major pivot like this one right here, draw it over to the next major pivot, and what do we got, guys? We got a great stopping part for the stock today. Now, yes, the stock did open up. They were about 10% or so higher on the day, and then all of a sudden it accelerated up, being about 14% higher before having some profit takers push price back into this bearish consolidation. So this good news has not yet gotten it out of the woods. If we closed the day up above this trend line, that would have been more near-term bullish for ANET. But still right now, be watching this inclining trend line for it to break the current bear flag trend and then reattack this parallel, which would then also mean testing all-time highs there on that chart. Pretty interesting stuff. And plus, we've got earnings season here, guys. We love it. Lawton's rocking his earnings show. Please tune in to all of our shows. Get a lot of details and information to help you a better trader. Don't forget to like and subscribe to these videos. Also, send it out to your friends and family so they too can learn about technical analysis in the markets. Don't forget, next week, we have the FOMC coming on Wednesday. Aside from that, I'll be off tomorrow. Guys, have a fantastic weekend, and I'll likely be out of the office next week. So we'll have the rest of the guys filling in for me here in the office, but I can't wait to get back come February so we can rock it with some more great analysis with each and every one of you. Thank you again for watching, and I'll see you guys on the charts next time. Take care.